Hey folks, welcome to Economic Binoculars. In my previous video, I analyzed the possible winners and losers in this trade war. Apparently, I missed out Japan. In the losers list though. Have you noticed Japan's Nikkei took a dive? The yen is going wild again, and economists are dusting off their 2008 crisis playbooks. What's going on? In this episode, we're diving into Japan's fragile economic recovery, how it's being tested by a new wave of US tariffs, and why this could be the worst déjà vu for Tokyo since the 90s. Stick around, because we're unpacking 1. Japan's slow economic recovery. 2. The tariff train hits Tokyo. 3. Can Japan survive the next storm? Okay, let's roll back the clock. For 3 decades, Japan has been stuck in a weird twilight zone of low growth, deflation, and central bank experiments that would make Frankenstein nervous. The Bank of Japan kept interest rates near or below zero for years. Inflation? MIA. Wage growth? Forget about it. But finally, in early 2024, inflation did show signs of life. BOJ even raised interest rates in March, first time in 17 years. You'd think that's a good sign, right? Well, Japan's economy is like a patient just getting out of the ICU and suddenly someone's suffocated with incoming recession. Now let's talk about exports. Japan's lifeline. The exports made up about 21.8% of Japan's GDP, and roughly 40% of that went to the US and China. Approximately $145 billion went to the US. Of this, automotive exports representing 1/3 of Japan's total exports to the US. And don't forget the yen. The Japanese yen is a classic safe haven currency. Anytime the world gets nervous, investors rush to buy yen, making it stronger. That might sound good, but for Japan's exporters, a strong yen is like jogging uphill in flip-flops. Their goods get more expensive overseas and sales tank. In April 2025, Trump officially kicked off round 2 of the tariff war. And guess what? Japan wasn't spared. US imposes 24% tariffs on Japanese goods and 25% tariffs on auto industry, one of Japan's most significant exports and a cornerstone of its economy. That includes Toyota, Honda, Nissan, and Subaru, all those well-known Japanese cars. Curious about the origins of this chart? While the White House's formula appears sophisticated at first glance, it's essentially a straightforward ratio. The trade deficit divided by imports from the US for a specific country. Interestingly, the tariff itself doesn't factor in the calculation. Yup, nothing fancy but a 4th grader's math, and it has nothing to do with the tariffs. In 2024, Japan exported approximately 1.3 million vehicles, approximately $42 billion worth of vehicles to the United States. This auto tariff hits Japan's auto sector like a wrecking ball. Companies panicked, investors bailed. The yen strengthened due to global uncertainty, and Japanese exports got even more expensive. And let's not forget the August 2024 carry trade panic. Here's what happened. Traders had borrowed in yen to invest in higher yielding assets abroad. But when the US market flashed recession, they fled back to yen. Boom! Massive buying pressure. The yen shot up, exports slumped, and the stock market dropped. This will probably happen again, or it's happening. Oh man, let's take a look at the Nikkei 225. Since Trump announced new tariffs policy, it plummeted 6% in 2 trading days. That's not just a couple of red days. That's a sea of red sushi-grade disaster. So what happens next? If this global slowdown keeps going and Trump's tariff crusade expands, Japan could be staring down a double whammy: falling exports and a rising yen. That's the exact combo that gave them the lost decades in the first place. Worst of all, Japan doesn't have cards to play.
Let me tell you, you don't have the cards. With us, you have the cards. But without us, you don't have any cards.
Public debt is already over 260% of GDP, highest in the world. And with rates going up, the cost of servicing that debt is rising too. Meanwhile, US consumer spending, Japan's favorite customer, is cooling off. Retail sales in the US dropped for 2 straight months in Q1 2025. That's not great news for a country like Japan, whose export model depends on Americans buying cars and electronics like candy. The scary part? If global recession hits and China slows down too, which is happening, Japan's caught between two collapsing dominoes. So, Japan's in a tough spot. It's still dependent on exports, still battling a strong currency, and still allergic to inflation. And now, it has to navigate Trump-era trade policy, déjà vu, with very little ammunition. So, here's the takeaway. Japan's economy has made progress, but it's still standing on shaky legs. Tariff wars, volatile yen movements, and weak global demand could pull the rug right out from under them. If recession hits and exports slump, Japan's dream of normal might slip away again. The world's third largest economy can't afford another lost decade, but that's exactly the risk they're facing. Do you think Trump's tariff war is justified or just economic whack-a-mole? Can Japan really shift away from being so export-reliant? Are we heading into another global recession? Would you buy a Toyota if it cost 25% more because of tariffs? Drop your thoughts in the comments. I read every one of them, like BOJ studies inflation. Thanks for watching. If you found this video helpful or mildly entertaining, give it a like, share it with your finance-curious friends, and hit that subscribe button. We've got more global economy deep dives on the way. Until then, stay sharp, stay curious, and don't sleep on the yen.